Something very peculiar about annuity rates that should be interesting to you. I've always been a fan of fixed annuities, 100%. Back in the old days, a few years back, I said, yeah, I'd be hesitant to do much into them now because the rates are so low. Similar to what I was saying about bonds as a whole. You might remember that. Your old buddy Josh, right on occasion. But the nice thing about fixed annuities, are guaranteed. They're locked in. They're not FDIC insured. You got to pay taxes on the deferred income. I get all that. There's a penalty to take your money out. The whole thing. But there's no downside other than the insurance company's ability to make claims. And if the insurance company goes bankrupt, we're all done anyway. That's all there is to it. If you look at the Great Depression, insurance companies were well more capitalized than banks, and I can only imagine the same thing is now as they got rid of Graham Leach Bliley got rid of what the hell was that banking regulation? I can't remember. It's been so long, I can't remember. They got rid of a banking regulation where a bank could invest in the whole thing's done. So anyway, the banking industry in of itself is just it's basically one big government entity anymore. But it's not. That's a scary thing. So insurance companies have to be more conservative with their money. Why? Because you're putting money into insurance, i.e., you're deferring consumption today of paying the insurance company with the understanding that the insurance company is going to make you whole if something goes awry, i.e., you die, your house burns down, or something like that. Insurance companies actually are the biggest fiduciaries there are, in my opinion, because they are on the hook to make you right if things go bad. Thus, they have to be more conservative. These banks, no. Anyway, all right, it doesn't matter. It's just a rant. So I've had a number of people who talk to Stan the Annuity Man, and they like this guy. Now, I don't know this guy from Adam. I can't recommend him, but the people I know who I respect and they like this guy, then I gotta buy. If A is greater than B and B is greater than C, then inherently A is greater than C. So I don't know this guy, but if people I know who I trust and respect like this guy, then I inherently, because I know these people who like this guy, then I do too. All right. Will do, not might do. Interesting. Anyway, but it's interesting here. So check this out. So we're looking at guaranteed annuities. I'm not sure what MY, I don't know what that means. But anyway, check this out. We're going to go to Georgia. We're going to look at 5 years. I want to show you something, man. And this is, this guy, this website's fantastic. Big fan. We're just going to look, you got, let's look at nationwide. You got 4.95% on a 5-year fixed annuity. And that's with a minimum of $100,000. All right. That's interesting. So I went over to USA. So there's a method to my madness here. So remember, nationwide, obviously, Mass Mutual. Okay, that's even a better one. I don't know the difference between Ascend. Ascend. I don't know what that means. I frankly don't care. Mass Mutual is a good company. They're highly rated. But anyway, 4.9. Interesting. Now, free withdrawal, 10% a year. I don't want to get into the mechanics of annuities here, but I'm looking. Look at this. So Mass Mutual, dump $100,000, you get 4.9. Now we're going to go to USA on their 5-year. Dump $100,000, you get 4.3. Interesting, all right? So let's see if he got USA on here. 4.3, 4. I don't see any USA. Yeah, so it relies. No, it's not that way. AIG, yeah, all right. Because USA is a member only. I get that. But anyway, 4.3. Isn't that interesting? But it's more than that. Watch this. 100,000, 4.3 for 5 years. Let's go to 10. You ready? 100,000, 4% for 10 years. Huh. So you're locking up your money and getting more for 5 for shorter term than you are for 10. Huh. Interesting. There's a reason for that, I think. So now we're going to go back to, we're going to go to 10 years. So remember, 4.9 with Mass Mutual for 5. Let's go to 10. I haven't done this with Stan the Annuity Man thing. So 10. What? Where's Mass Mutual? Where's Mass Mutual? Does not Mass Mutual have a 10-year annuity in here? Mass Mutual. So let's type in, let's go over here. Mass Nothing. Why does Mass Mutual not have a 10-year annuity? And look at these 10-year annuities, 4.2, 4.2, 4.75. The highest is Farmers. It's not even rated at AM Best. I mean, what I don't even know what Ocean View Life and Annuity is, Atlantic Coast Life. Why are these people not locking in money for 10 years? Why is USA locking in money lower for 10 than it is for 5? You want to know why that is? Anyone? Anyone? Because they don't expect annuity rates to keep going up. Interest rates, that is. So if interest rates don't keep going up and you can lock in a guaranteed, and look, the same goes with bonds, I might add. I'm telling you, man, for the last year I've been saying bonds look good to me, 100%. Because if bonds level out, annuities level out. Bonds have obviously volatility, but I mean, as long as the company that issues the bond or the government entity doesn't go bankrupt, you're going to get your principal and interest, no big deal. But if annuities, you could lock that sucker in now. Why would the insurance companies not have 10-year rates higher than 5-year rates? Why would insurance companies not be issuing 10-year rates? Because they don't want to be on the hook for that long, because they don't expect annuities to go up, the interest rates to keep going up. If they did, they'd lock that money in now. Isn't it interesting? There is an opportunity here. In my opinion, I could absolutely be wrong, and you got to do your due diligence, man. But man, come on, you can see this. Can you? Look, I mean, could we go from Paul Volckerish 20% Fed funds rate, highly suspectable? I don't know. I highly suspect that won't happen. But man alive, dudes, if I get guaranteed money, if I need some guaranteed money right now. So I was talking to a lady the other day. She's like, I just can't take the markets. Right? It doesn't matter, rightly or wrong. I don't care. I'm not here to argue against her. I don't care. She goes, what do you think if I just dumped my $300,000 into a fixed annuity? I said, man, I got no qualm with that. $300,000. She's going to put an annuity to Stan, the annuity guy, or whatever his name is. Get, I think she said 4 or 5%. I can't remember. We'll just say 5% for simplicity. She's going to get $15,000 a year guaranteed. She has access to 10% a year. She has access to $30,000 a year without a penalty. And that's exactly what she needs for her husband to defer Social Security. No downside risk at all. I said, man, once her husband's on Social Security, they got enough income via Social Security, debts will be paid off to freaking pay all their bills. I said, I got no qualm with that at all. None. Keep it simple, stupid. The best thing about fixed annuities is that they're guaranteed. There's no downside risk other than the viability of the insurance company. Again, if insurance companies go bankrupt, we're all doomed. Something to think about. They look pretty attractive to me. And again, this is not a recommendation because you got to know your own stuff. But I'm sitting there thinking there's a reason why the 10-year annuities are lower than the 5-year annuities. There's a reason. I'm telling you right now. You can read the tea leaves. All right, love to hear your thoughts. We'll see you.